Hey everybody, welcome. Today we are going to discuss the following. Number 1, history of taxes. Number 2, financial IQ. On number 3, we'll discuss power of corporations. And on number 4, we'll talk about rich people on nothing but control everything. And on number 5, we'll see the difference between owners and employees of corporation. And that difference will be in terms of earning and taxes. Okay, so let's start. People love the idea of Robin Hood, who robbed from the rich and gave it to the poor. But Rich Dad really didn't like him because still he robbed and gave it to the people who never worked for it. The idea of taxes were taken from Robin Hood. The purpose of taxes is to take money from rich and give it to the poor. Taxes were first imposed by Britain for the fight against Napoleon from 1799 to 1816. And in America, the taxes were imposed to pay for Civil War from 1861 to 1865. In 1874, England made income tax permanent. In 1913, United States made income tax permanent as well. But it took both of them 50 years to sell the idea of tax on income to the public. Initially, everyone was told that taxes are to punish rich. So all the middle class and poor supported the idea and voted for it. First, government started taking taxes from the rich only, and from the collected tax, they paid salaries and pensions. Government was getting more money and its appetite grew. Most of the rich people used their financial knowledge and escaped taxes. Government was hungry, so they started imposing taxes on other people as well who had less income, and they are obviously middle class and poor. So the people who supported tax has been punished by it the most. Rich people are smart and they react when something happens instead of just accepting it as it is. Now the middle class pay all the taxes for poor and rich pay less taxes. Poor and middle class don't react, they just accept things as it is. No matter what kind of taxes were imposed, rich always find a way or a loophole to avoid taxes. They hire smart accountants and smart attorneys to help avoid huge taxes legally. The rich outsmarted the intellectuals solely because they understood the money, a subject which is not taught in school. My poor dad was paying a lot in taxes, but he never fought back. My rich dad didn't either. He just used the biggest secret of rich. He played the game smarter and he did it through corporations. Corporation is a sort of legal body without a soul. We'll discuss how rich use corporation to avoid taxes later in this video, so watch this video till end. Anyway, my poor dad spoke of the virtues of working your way up the corporate ladder. When I told this to my rich dad, he laughed and said, "Why not own the ladder?" When I started a job at Xerox in sales department, then my rich dad's advice started to make sense. I will look at my paycheck and I'll be disappointed by looking at the amount of deductions. So I decided to start my own corporation. Soon my corporation started to pay me more than what I was earning from my job at Xerox. Now I had financial freedom. No matter I work or not, I'll get money coming in. In my asset column, every dollar was working as an employee 24/7 for me, and it was multiplying and producing more employees, which means more dollars. And those dollars were working for me as well. Without financial knowledge or financial intelligence or financial IQ, it would have been impossible. Financial IQ is made up of 4 broad areas of expertise. Number 1, accounting. Number 2, investing. Number 3, understanding markets. Number 4, the law. Accounting. Accounting is financial literacy or the ability to read numbers. This is a vital skill if you want to build an empire. The more money you are responsible for, the more accuracy is required, or the house comes tumbling down. This is the left brain side or the details. Financial literacy is the ability to read and understand financial statements, which allows you to identify the strengths and weakness of any business. Number 2, investing. Investing is the science of money making money. This involves strategies and formulas which use the creative right brain side. Number 3, understanding markets. Understanding markets is the science of supply and demand. You need to know the technical aspects of the market, which are emotion driven in addition to the fundamental or economic aspects of an investment. You need to ask yourself, does an investment make sense or does it not make sense based on current market conditions? Number 4, the law. A corporation wrapped around the technical skills of accounting, investing, and markets can contribute to explosive growth. A person who understands the tax advantages and protections provided by a corporation can get rich so much faster than someone who is an employee or a small business sole proprietor. It's like the difference between someone walking and someone flying. The difference is profound when it comes to long-term wealth. Power of corporations. A corporation can do many things that an employee cannot, like pay expenses before paying taxes. That is a whole area of expertise that is very exciting. Employees earn and get taxed, and they try to live on what is left. A corporation earns, spends everything it can, and is taxed on anything that is left. It's one of the biggest legal tax loopholes that the rich use. They are easy to set up and are not expensive if you own investments that are producing good cash flow. For example, by owning your own corporation, your vacations can be board meetings in Hawaii. Car payments, insurance repairs, and health club memberships are company expenses. Most restaurant meals are partial expenses and on, but it's done legally with pre-tax dollars. Rich people own nothing but control everything. We live in a litigious society. Everybody wants a piece of your action. The rich hide much of their wealth using vehicles such as corporations and trusts to protect their assets from creditors. When someone sues a wealthy individual, they are often met with layers of legal protection and often find that the wealthy person actually owns nothing. They control everything but own nothing. The poor and middle class try to own everything and lose it to the government or to fellow citizens who like to sue the rich. Difference between owners and employees of corporation. Business owners. Number 1, earn. They first earn the money. Number 2, spend. They spend it as much as they want from the company's account and nobody can question them on that because company is theirs. Number 3, pay taxes. Finally, whatever is left, they pay tax from it. Employees. Number 1, earn. They earn the money. Number 2, pay taxes. Then they pay taxes first. And number 3, spend. Finally, whatever is left, they spend that. Take a look at this financial diagram to understand the cash flow of business owners of corporations. All of assets generate corporations' income, and after meeting the expenses, the rest of the income is the business owner's income. And all of the business owner's expenses are also covered by the corporation. For example, fuel of the car, the money to pay for the meals, and money to travel are the expenses of the owner, which will be covered or paid by the corporation. So that is the advantage that rich get by using the name of corporation and pay no taxes on their spendings. So these are the things that we have discussed from Rich Dad Poor Dad chapter 5. In case you wanna buy the book, link is in the description. And if you do not want to miss such important videos, then please subscribe and hit the bell icon. And finally, take care and a big thanks for watching.